Hello traders, this is Ala Peters. I'm here to present Bennett McDowell, founder of TradersCoach.com. Bennett has a fantastic career in financial world, and as a financial advisor and securities broker, Bennett developed a niche in active trading and investing for community of high net worth individual using his own proprietary trading system. So we are here for a fantastic webinar where we will learn how to prepare for success for the week. Bennett's successful approach later became known as applied reality trading or the ART system. So thank you traders so much for being here with us, and I'm absolutely thrilled to present Bennett. Bennett is the founder of ART software, which he presented to the public in the year 2003, and today's software is used in over 55 countries around the world by sophisticated hedge fund managers and individual investors alike. An expert in technical analysis, Bennett speaks at trade shows, including Traders Expo, and writes articles for leading publications such as Technical Analysis of Stocks and Commodities magazine. He is honored to present to TradeStation Morning Market Briefing every Wednesday. In addition, TradersCoach.com has received numerous S&C magazine Reader's Choice Awards. Bennett has written 3 best-selling books published by John Wiley & Sons, The Art of Trading, A Trader's Money Management System, and Survival Guide for Traders. His new book, Elliott Wave Techniques Simplified, will be released by McGraw-Hill in 2014. Bennett resides in San Diego, California, with his wife and 2 beautiful children. He can be reached by email, which I will post in the webinar, via team@traderscoach.com. So traders and Bennett, shall we begin the webinar? Thank you so much.
Ala, thank you so much. It's great to be here. Let me just make sure everybody can hear me okay. Quick little audio test, and you should be able to see my screen as well. So let's just make sure we're looking good here. Okay, thank you, Gene. DB, good. All right, let's get going here. All right, Ala, thank you for the nice introduction. Ala spoke to our group yesterday, did a fantastic job. It's so nice to work with Ala and her group. So I am really pleased to be presenting today to your group, Ala. Thank you so much again for having me. All right, we're going to talk today about how to plan for success every week. We're going to go over some of my favorite setups, and you know, you only need a handful of really good setups each and every week in order to do well in this business. So we're going to cover those, but you have to also be prepared. You have to kind of get going Sunday night, early Monday morning before the markets open. You have to have your game plan in hand. It's actually best to do it probably very early Monday before the markets open, because that way you have the latest information. So we're going to cover some of that as well. But the idea here is to be prepared at the beginning of the week, hit the bullseye, and make as much money as you can. After all, that's why we're traders, right? All right, well, I'll introduce me. I want to just say, please drop by and visit our website at any time. It's traderscoach.com. We've been in business now for quite some time, and we have a lot of cool stuff on the website and a lot of free stuff that you may want to check out as well. Also, I've written 3 books that have been published by Wiley and available at most bookstores out there. Probably the most favorite place folks like to buy books these days is Amazon, because you can read the fun reviews. And so you can check these books out, but there's one on risk control, one on my trading system, and then one on how to run your business like a hedge fund or professional trading firm, and that's the Survival Guide for Traders, which is my latest book. The book, Elliott Wave Techniques Simplified, is coming out late this fall, early winter, and this one is being published by McGraw-Hill, and if you like the Elliott Wave, you're going to love this book because there's some very cool techniques. I introduce a matrix of probabilities so you can take the subjectivity out of your wave counts, and that again is coming out this fall to winter. Of course, in trading I have to talk about the risk involved. Without risk, of course, there's no what? Opportunity, right? So risk and opportunity go hand in hand, but we do have to let you know there is risk in trading the financial markets. I'm sure everybody knows that by now. All right, let me ask a quick question out there, and use your chat to answer this, because I'll be very interested to hear the different responses. How many people think trading is complicated? How many people think trading is complicated? No, yes. Emotionally, yes. Good answer, Mark. Yes. Yes. It's funny. A lot of traders do think trading is complicated, but trading has been going on in some form or format really since the time we were making tools, way back in the Stone Age. I mean, think about it. Folks were trading furs or food for tools and vice versa. The only difference is now we have all this computer technology, and it kind of is interesting because we tend to sometimes overcomplicate things, and I think trading's no different. So I'm a big believer in keeping things as simple as possible. So we're going to talk about that and kind of talk about a few simple concepts or patterns to look at that really have been very successful for me. All right, another question. How many of you have and adhere to your trading rules? Anthony, good answer on that. Only complicated as we make it. How true, how true. All right, how many of you, though, now have and adhere to trading rules? Yes, good. All right, one person. How many don't even have trading rules? That's the next question. All right, well, you have to have a game plan. So when I talk about trading rules, what I'm really talking about is having a game plan. Because if you don't have one, what happens is you get caught up in the emotional day-to-day things that occur in the markets, the hype, so to speak. You turn on the news and you get drawn in one direction, only to find 10 minutes later getting drawn in another direction. So you have to have something that keeps you stable, keeps you with a game plan, so you're not getting emotionally pulled right and left by the markets. All right, now, this would probably be an interesting question, an easy question for most of you to answer. Would you be interested in learning a structured and systematic approach to trade selection, showing you that your trading really is not that complicated? I know Ala has a system here that you all follow and talk about, and that's structure, okay? So you already probably, whether you realize it or not, have some form of structure or systematic approach, don't you? I would certainly think so. Question is, you got to keep doing it. All right, how many of you would like to know what the market probabilities are each week at the beginning of the week? Okay, how many of you would like to know what the market probabilities are each week at the beginning of the week? So what I mean by this is, when you look at individual markets, that's one thing, but what I'm talking about here is looking at things like the overall Dow or certain sectors that you're trading in or want to trade in. This is all about the preparation that we're talking about that you need to be doing at the beginning of the week, so you kind of have a good idea of what to expect as the week unfolds and what direction you want to go into. All right, because you know what? Each week, the goal is what? To make money, all right? Trading is fun, sure. We love trading, sure. But, ultimately, we want to make money. That's why we're here, all right? How do you do that? You got to start the week with a proven plan. All right, action step number one. First thing is we want to know what the market's doing. So we want to focus on analysis, on a weekly analysis of the Dow. Okay, we want to take a look at that. We want to look at the S&P for key price levels. You want to determine the Dow Jones and the S&P target zones for the week. All right, and you can use different time frames to get a feel for what type of target ranges you're talking about. In other words, if you're a day trader and you wake up early in the morning, well, you can obviously look at target ranges on a very short-term time frame. If you're looking for target ranges for the week, you may want to look at the 60-minute time frame. We find that a very good time frame to kind of get a short-term perspective on the market. And then you can look at also longer-term positions. And for that, you can use the daily chart or even the weekly chart at times. All right, so there's a lot of different analysis that you should be doing at the beginning of the week to get a feel on what direction the market's going to be taking from a technical standpoint. All right, next thing you want to do, the next action step, is finding the best trading market sectors and create what we call a watch list. So now what we've done in action step number 1 is we looked at the broad market, right? We've looked at the Dow, the S&P. Now we want to hone in and focus on some individual markets to actually trade, all right? And these can be also, you know, basically index ETFs if you want. They can be futures markets, Forex markets. Doesn't matter, whatever you want to trade, actual stocks, it doesn't matter. But the idea is to uncover markets that are going to be in play or about to be in play for the week. And so, well, how do we do that? What do we do? Well, you know, you can scan for these markets. If you're using technical analysis and certain setups, which I'm going to go over in just a little bit, you can scan for these setups and look for sectors and individual markets that are triggering certain setups, okay? You can also uncover some news items coming out. Now, I'm not a big believer in trading the news, so to speak, but I do use the news to steer me to markets because usually that means the volume is going to be quite high because it's going to steer everybody else to that market as well. So news can be a great thing, or even an announcement can be a great thing to steer us in the right direction, and then use technical analysis to answer the question of when do I get in and when do I get out. So the technical analysis answers the momentum question of when do I get in to make the most amount of money in the shortest period of time. And of course, we also use risk control on each and every trade. But we still can use the news and still use things like analyst upgrades and downgrades as well. A lot of times, even on individual stocks that I'll select for position trading, I will take a look at some of the analyst upgrades that are coming out for the week and see which ones came out on Friday or Thursday as well. And see from a technical standpoint if these are also aligning themselves for good momentum trades. You know, a lot of times an analyst will come out and predict or put a buy rating on a stock, but it hasn't finished from a technical standpoint. Maybe it's in a downtrend. Okay, Netflix years ago was a perfect example of that. It was still heading down, and the analysts upgraded it, but it still had a ways to go. So you kind of, from a technical standpoint, wait until the market reverses, you see some actual buying activity that represents reality, and then you can make a judgment from when is a good entry point or not. So the key there is analyst upgrades and downgrades can be very helpful. Sometimes you'll get an upgrade or a downgrade that is going with the momentum, and so then it's a great sync, so to speak. You're drawing a lot of people there, and yet at the same time, it's great for a quick momentum trade as well. All right, so, and again, we scan the markets, like I mentioned before, for some of our special patterns, and I'll cover those in a little bit. All right, action step number 3, okay, for the week. Find the best trading markets. Don't get stuck in quiet markets. This kind of piggybacks onto action step 2, but at the same point, is you don't want to get stuck in markets that may be on your watch list, and a watch list may consist of stocks or markets that have been in a channel for quite a bit of time, and we know that when markets are channeling for a while, when they break out of that channel, they usually trend extremely well, but until they break out of that channel, they're quiet, they're dead. All right, you don't want to be stuck in that channel. Don't tie up your capital there. All right, wait for the market to break, but keep those markets on a watch list and watch them. All right, but don't get stuck in them. All right, then you want to locate key entries, stop placements, trade exits, and profit target zones. So on the markets that look like they're going to be in play, all right, and you got a good possible entry coming up for the week, all right, make sure you know when you're going to get in, make sure you know where you're going to put your stops, know where your target zones are going to be, and know how you're going to handle risk control, because you've always got to use risk control. All right. So when we talk about getting into markets at the best time, what you want to do is apply a high probability matrix of technical analysis and look for key technical convergences indicating bullish or bearish trades. So you want to basically, again, look for patterns that you may be already using, and then some of the patterns I'm going to share with you coming up on what we like to use. And again, you only need a few. You don't need to overcomplicate your trading by looking at so many different patterns. Keep it simple. That's what I always say. All right, some of the best trading patterns may be simple things like breakouts from channels, like we already talked about. Fibonacci price levels. I know Alice speaks a great deal on Fibonacci. All right, we use it all the time. It's great stuff, especially during wave 4 retracements. We use it for target zones for Elliott wave 5s and also for bottoms and tops in general. So Fibonacci can be a great tool in order to help you find some of these key patterns to use. All right, and then you need key exit price levels and price profit target zones. Know how you're going to get out. Are you going to scale out? What particular levels are going to trigger your stop exits? Okay, here are some of our patterns that we like. We call them the secret setups. And we have found that these have been very high probability patterns that we've used for over 15 years. So they're really good. Doesn't matter what market, because these patterns can be found on all time frames and literally all markets. We like to look for long and narrow channeling markets. We scan for these. We have a special scanner that we scan for these. We also look at these. This is the things you should be doing every week before the market opens. We also like these simple 1, 2, 3 trending price patterns for entries and stops. We have software that helps us with this called the Applied Reality Trading software that identifies these types of trend trading price patterns. And it also does it in such a special way that it looks for momentum as well. So not every 1, 2, 3 price pattern, okay, is as good as maybe another one that has an accompanying amount of momentum with it. So we're very specific in what we look at. We look for pennants during wave 2s and even wave 4s. Usually we find them during complex ABCDE corrections. All right, excellent place to look for breakouts. And of course, if you're following the Elliott wave, and I know many of you do here, that you can anticipate the direction of the break already. All right, Elliott wave 4 target zones using Fibonacci retracements, Elliott wave 5 tops and bottoms, again using Fibonacci but using extensions. Okay, so these are some of our favorite setups, not very complicated, but extremely good. And for those of you that may not quite know a little bit about Elliott wave, let me just go over real quickly. In an uptrend, what Elliott says is that there are 5 waves in a trend. And I've labeled them here. Waves 2 and 4 are usually corrective waves. And if wave 2 is simple, wave 4 will be a little bit longer. Wave 2 can retrace, okay, 100% of the distance from 0 to 1 on this chart. I have it drawn at about 30%, but it can go down much further. Wave 4 usually retraces between 38.2 and 61.8%, which is a fib high probability retracement area. And then wave 5 is usually based off a Fibonacci extension or a price target zone for wave 5, all right, between 61.8 and 100 using the bottom of 2, the top of 3, and the bottom of 4. Okay, so that's what it looks like in an uptrend. In a downtrending market, okay, same 5-wave pattern, but this time heading down, okay? So Elliott wave applies to both uptrending markets and downtrending markets, not just one way. Here it was on Apple stock, and we did quite an analysis on this for my book coming out. But that is the wave 5 represents the September high there. And notice the waves inside the waves. Now, for those of you that know a little bit more about Elliott wave, you know the fractal symmetry in the marketplace, and you also know about the fact that in Elliott wave, there's waves inside waves. And so that goes down to the very minute and to the very long-term charts as well. So in this case here, wave 5 at the upper right-hand side occurred in the fall on Apple, and then it sold off, and then it recovered after that as well. We had an ABC sell-off. Okay, so this type of stuff can be very important to see where you are in terms of how much profit may be left in a trend, or whether you should be looking to go to the long side or the short side. This type of analysis, when you find a stock over the weekend or early Sunday or early Monday, even on the shorter term time frames, you can map that out. Here's where we're actually, again, this happens to be Apple again, with some of our indicators at the bottom. After the top was reached, we noticed the indicators were turning very bearish, indicating a new trend to the downside. So short trades should be taken at this point. Here again is a little bit more of a magnification where you can see the wave 5 top in September and how indeed that did come down to reach a new bottom down there. Notice the bullish divergence on the right-hand side as Apple was coming close to a bottom down there. Everything moves in cycles, and Fibonacci is a big help in identifying these tops and bottoms. And Fibonacci, as you know, can be found everywhere, even in nature, okay? Notice a Fibonacci be applied here to a hurricane, okay? But you can find Fibonacci structures and fractal structures in all forms of natures, clouds, plants, etc. This is my favorite one right here. This is to wake up the guys out there. Even Fibonacci in situations like this can be found. Amazing. All right, here's another example of Ford Motor Company, okay? When it was topping in 2013, all right, it turned around, sold off, and then did an ABC correction, and then was off to another trend after that. So we see these all the time in the market. Here's Starbucks, okay? Starbucks started to break it. I got a quick message that said connection lost. So let's see what happens with this. Looks like it's trying to reconnect.
We can hear you well, no problem.
Can you see the chart though?
All good. Yes.
You can?
Yes.
Okay.
All good. We had break. All good.
Okay, so you can see the chart. Okay, cool. Because I can't see it on my display here anymore, so I just want to make sure everything's okay. All right, cool. All right, so this is Starbucks here. Notice when this trend began to go into a corrective phase, this was the end of a wave 3 to the upside. Notice when it started to break the trend lines on the far right-hand side of the chart, all right, that these were areas where you start taking profits. All right, eventually you're taken out of the market altogether by these triangular pyramids representing key levels of stops in the marketplace. So in this case here, if we showed up to Starbucks on a Monday, we obviously at this point would not want to go long on this, but we would go ahead and draw in some Fibonacci retracements, put this on a watch list, and come back to it when it reaches our Fibonacci target zone and take a look at it for a possible trade sometime in the upcoming weeks. So when you start doing this type of planning, all right, early Monday, over the weekend, or whatever which way suits your best, you start coming up with a large watch list that's going to allow you to have plenty of trades each and every week based on what the market's doing. All right, let's keep going here. Here's a channeling market, okay? And in this channeling market, notice how long it was channeling. And you see these, this is a daily chart, but you see these on intraday time frames as well. And the idea is you don't want to get stuck in that channel. I do not go long or short in that channel. Now, I may have a bias on which way the market's going to break because of an Elliott wave analysis I've done on the market. But I'm not going to get into it until it breaks out. And so when it does, then I use my particular trading style and do the recommendations like that. Once it breaks out, then I have a planned point of entry and so forth. All right, same thing with this particular stock, which is another daily stock called Susquehanna Bank. We see these on all types of different markets. Just a matter of the market going in and out of different cycles. All right, Here's an example, again, of another one. Now, this is not Starbucks. This is Tesla. Notice this one. All right, again, finishing a wave 3, coming down. One thing I want to note on this is that there's an indicator in the center of those 3 indicators at the bottom that's remaining green. All right, that was very important to us because we knew that we were in probably a wave 4, still reaching down to its fib retracement levels. But after that, we were going to recover and take out the wave 3 high, because that one indicator in the center has a 75% accuracy rate, and when it's green, you just find the highest price bar in that green area, and you know that you have a 75% probability of prices retracing and going back up. So it's a good indication that the trend is not over. So it helps us identify or separate wave 3s from potential wave 5 tops. Also, the histogram as well went negative for the first time in quite a while, and that was an indication of wave 4 as well. So all these things that we do here, we take into account to formulate, all right, what we're doing on a stock. We don't like to necessarily trade a correction because they can be quite volatile and messy, but we can put those on a watch list and then come back to them later when they reach a Fibonacci target zone. Here's another one on the S&P, okay? And this one was heading down to a wave 4, wave 5 target zone. And this was an intraday chart. So again, the point is you see Elliott wave patterns on all time frames, and they're very helpful in identifying key levels of entry, exit, and also key levels of whether the trend is over or not to the downside. Risk control, very important as well. You need to also have a good, solid risk control plan to implement. What we do is we vary our trade size or position size so that the risk always remains a constant, but the trade size is the variable that changes in order to maintain the constant risk. So in a case like this, notice the difference between our entry and exit here is $5.75. When prices go above the point of that triangular pyramid, which represents a key resistance area at 1168.25, that's when we would go long and we'd set our stop loss below the support level at 1162.25 immediately. The next question is, before we get put in, what should our trade size be? Well, our trade size can be calculated based off our account size, the percent risk, and the entry and exit levels, the commission we're paying, and so forth. And of course, we do that using something called the trade size calculator, which is a piece of software on the right. And again, this is a great piece of software because no matter what trading approach you're using, if you know your entry and you know your exit, you can use that software to calculate your trade size. And it's really helpful because what it means is that if your entry and exit are close together, your trade size is going to be higher than if it was further apart. And the idea behind that is because we want to keep the risk consistent. And in this case, we don't want to risk any more than 2%, which means we don't want to lose more than 2% of your account value. So if we have a $50,000 account value, like in this example, 2% of that is $1,000. So we don't want to lose more than 1,000. Okay? It's not buying power. It's the amount we want to lose. Okay? And here it is being shown on using it for a stock as well. So our calculator does stocks, Forex, and futures. Now let me ask you a question. What if the risk, let me go back to this one here. What if the risk was $7 instead of $5.75? Would the trade size be smaller or larger? If the risk was $7 instead of $5.75, would your trade size be smaller or larger? Anybody out there? Somebody's got to have an answer. Did I lose you? Well, if the risk is greater, then the trade size has got to go down, right? So if you have a larger risk, your trade size or position size has got to be smaller to account for the further distance between your entry and your stop loss. That way, your risk stays a consistent 2%. Okay, so the next thing to do with all this information is putting it all together, okay? Connecting the dots is what I like to say for high probability trades. So very quickly, I think it's important to identify bracketed markets and stay out of them, but put them on a watch list. And if you get a breakout, then those are ones that can be used to actually begin trading for the week. So I think that's important. This is what we do. We try to look at a lot of different markets late Sunday and early morning as new information is coming in. We don't like to do it Friday because we like for the weekend to go through and try to get the latest information, preferably on Monday. All right? We then look for trend trading patterns. These are 1, 2, 3 type of patterns. Very important. And then we look at markets breaking through trend lines as well. We look at pennants, trend lines, and all those things we talked about. We look at Elliott wave, Fibonacci, and then develop a risk control plan. And we do this in a service every Monday morning called the Monday Morning Market Kickoff. And it's a service that we start at 6 a.m. on the West Coast, so that'd be 9 o'clock on the East Coast, a half an hour before the markets open, the actual stock market open. And we take a look at all the pre-market information coming in. I have a live wire here, so I get all the updates of what's happening in the market right before the open. And we go through these stocks on a webinar together. You log in, and we go through these, and I always can find a handful of good trades for you that week. And I actually go over them in the webinar to show you the channeling markets, why we're interested in it, what's good about it. We'll look at some that aren't so good, and then we'll look at some that are. But by the end of the hour, we usually find some really good setups. And we also look at very short-term time frames for day traders as well. And we look at the overall Dow to get an idea. Hey, is it topping? Are we going to be in a correction this week? Are we going to go into more highs? How should we approach the week? So we really help you with your game plan each and every Monday before the market opens. So you're ready to go. And then we actually stay with you for a half an hour after the market opens until 7 and actually make sure that we've got everything covered, all questions answered. And even if you have some stocks you're looking at Sunday that you might have found, you bring them Monday and we look at them as well. And we give you our kind of analysis too. So we got it's called a Monday Market Kickoff, and Gene's got a really good deal for you guys because we like to do things with Allah's group, and Allah likes to do things with ours. So I'm going to put a link up here, and hopefully I'll do this right. Let's try. I'll try it in that one. Does everybody see that? I put that in the announcements area. Allah, hopefully that was the right place to put it. Okay, so that's a link you can click on. And this is going to be, it's a VIP special pricing that's going to be good until tomorrow. So it's 24 hours only. And then the regular price is $99. All right, so it's a real good price. That's a monthly price, and you get 4 hour-long webinars a month on Monday. And in addition, I write a report that we actually post in our secure area for kickoff subscribers Sunday, okay, by 6 p.m. Eastern Time. That gives a summary of what I think the stock market's going to do in the upcoming week. And I can't tell you the numbers of subscribers that we have. They love this service. It's simple, effective, all right, moderately priced. We have a good time on the webinar. It's not too long, all right, it's not too short. It's the perfect amount of time to cover everything we need to cover. We look at analyst upgrades. You know, again, I have a live wire. I get all the analyst upgrades as they're coming in. I get all the news events from around the world as they come in. And we talk about these things that are important. And we look at them and see if they're going to affect the market. If we have something coming up on a stock, we'll take a look at the stock and see if that's something that could be in play or not. So it's a really good service. You can use it in conjunction with what you're using here with ALA, because I know you have a trading approach here. This can be an addition to it, and you certainly can get some great setups from this, and then during the week you can apply your own form of technical analysis as well. But we're going to steer you in the right direction, and we're going to give you a good, clear, concise view of what's occurring in the marketplace. And so when you subscribe to this, you get a password, a username and a password. And we have a secure area on the web that you get a link to, and you actually log in, and all this information is available to you 24 hours, 7 days a week. So once we put a report up, for example, on Sunday, it stays up until I replace it the following Sunday, and you can access it as well. We record all our webinars, and so all the recordings from Monday are also posted in the secure area. So if you happen to miss a webinar on Monday, but you want to come back and take a look at it, maybe you had a meeting that morning, you couldn't get to it, we'll have it posted pretty soon, later in the morning that same day, and you can go and review it to see what we talked about for the week. So any questions on the service or anything to this point right here? Everybody, I think, got the link, so we're in pretty good shape there. Okay, good. Excellent. All right, so that's pretty much it. Again, you got a handful of good techniques here, I think, to use each and every week. And I can't say how important it is to have a game plan before the market opens, so you don't do what I call emotional trading and get caught like a ping pong ball being bounced around by different news events. You need to have a game plan, and the purpose of this service is to give you that game plan. All right, so Al, I want to thank you for having me today. If there's any questions, feel free to ask, but that's pretty much all I got.
Thank you, Bennett. Thank you so much. Thank you, traders. Thank you so much for your time. We will be emailing recording of this webinar tomorrow. So have a fantastic afternoon and look forward to having you again, Bennett, soon. Thank you. Thank you, traders.
Okay, thank you, Ala. Take care, everybody. Thank you very much.